Hey guys, as always, we are here. I'm Arthur, CEO of B2Broker group of companies. John Murillo is head of dealing division of B2Broker group of companies. And John, recently we have received one very interesting question about slippage. So please, can you explain us a bit more? What does it mean, slippage?
Over the years, I've been in this industry. I continuously hear the term slippage. And I believe there is a misperception out there. Why I say this? A trade, when an average trader looks at a screen and clicks to trade, a trade or a command is initiated and it goes through our infrastructure and ultimately goes to the street, as we call it, or to the liquidity provider. This process is in which this transaction travels and is confirmed to the end user has what they call slippage. But Arthur, let's think sequence of events here. A trade is initiated, it goes through the bridge, it goes and gets executed to market. There is a time delay, and by the time it hits the bank, very likely the price has changed. Prices in our industry change extremely fast, and you don't even see this through your own eyes. Now, depending on the size of the ticket that you're sending to market, we call this in the liquidity space, you will consume liquidity. You will sweep the book, that aggregation that we have in place, where we have different banks pricing in, or non-bank liquidity providers. These guys provide you a quote, and that quote is typically, for example, what we call top of the book, the best bid and offer. So that's the spread that you get to see in technology like meta quotes. However, if you send a big ticket, you will consume liquidity because you're using market participants' prices that are pricing in at a certain layer. And each layer has a certain amount of liquidity. So from the moment you enter the market until you consume that liquidity, there's a price movement, but this is a natural process of liquidity. Some people call this slippage. Why? Because there's a tendency that some broker dealers, for example, they don't send the order to market, they confirm that price to the client that he sees, but that order never left. So the price they see, and they get used to this type of execution in which they see a price, they get that price, and then they come to businesses like ours, which are truly STP, they go to market, the price change, and they call that slippage. So it's a debatable subject. What is slippage? There's no such thing as no slippage. It's very rare that the same exact price that you came at market will be available when you get confirmed by the liquidity provider, because there's a travel time in between. Think of it this way. Imagine if you trade during the news.
Yeah, there is the queue of orders, right?
There are thousands of orders globally going to multiple our tier 1 banks in the world that make up our business. All those orders must be executed. There's a delay, there's a time delay. And the more people participate in an order book, naturally you're gonna absorb that price. So the actual term is debatable. Is it really slippage? I would call it liquidity consumption. And is there such thing as no slippage? Well, I'll leave it to your discretion.
I see how to call it.
It's very difficult not to.
I see. So basically, as far as I understood, like there is no such thing like no slippage, because no slippage means order didn't go on the street. Correct. Or didn't hit real market, real liquidity. That's why there is no slippage actually. But slippage is the nature of execution.
Absolutely. And remember something very important. In our particular offer, what most customers may not know or may know once they become clients, it's very important. The depth behind our order book, Arthur, allows you to execute big orders. So as you grow a business, this becomes a pivot point in your success.
I see.
Market impact of your order in our liquidity aggregation model, it has probably one of the slowest ones because naturally we provide you with depth that sustain that trade.
I see. So this is why you so care about your aggregation in order to make your order book pretty depth and pretty strong in order to keep the hit when someone is trying to swipe your book with the big clips, right?
And that, what I normally do with big clients and institutional businesses is we create something we call bespoke, right? It's a total customization of the liquidity for your needs. Because for example, there are some of our customers that do very big clips on majors and some other customers that do big numbers on exotic pairs. And those are the parameters we need to have in mind, and we have these discussions with our LPs. So our business is very well diverse from that point of view, and we can customize anything you need.
I see. John, one more question here. Maybe it's somehow related to slippage as well, but sometimes I hear these questions. What is about last look? Because I know this actually term in this definition came from the exchange world, right? And but I see time to time that some brokers or liquidity providers, they say on their website, especially like no last look. What does it mean?
So basically, the banks that is taking the trade from us has hypothetically speaking, last look on the trade. It means they may confirm that price or may not at their discretion.
I see.
Most of our liquidity providers do not have the capability to do last look, most of them. But it was a practice forever, so it does exist.
I think it was, it used to be using at the time when it was, how it's called, like request by price or something, RFQ, something like that.
Correct. So we use for streaming quotes RFS, which is request for stream currently in our infrastructure. There's also for NDFs, RFQ. So your request for quote.
Request for quote.
But that's an old, it's still in practice.
Okay, thank you very much for explanation, John. And guys, now you know what does it mean slippage and why who is stating that they don't have slippage is basically, I don't want to be rude, but in reality they are lying to you guys. So this is why slippage is the nature of the market. Okay, see you with the next question.